Good afternoon. George Cavaligos for HFT Bonds. Holiday trade, no Fed, no Treasury, no economic data. Market didn't make new lows last night. Should have jumped on that trade and joined the bounce, because we saw the correction start in the risk markets on Friday. I'm a bit surprised that we didn't see some of this bounce on Friday still. I was stunned that the market ended up closing on its lows Friday in the treasuries. Walked in this morning, got here late because of the holiday, figured it could be safe to sleep in, and saw the market, I think we'd already traded up to 133.06, 6 plus I think might have been the overnight high by the time I got here. One quick dip down to 03, and then off to the races once the pit session, well, there was no pit session today, but right at 7:20, somebody turned the machines on and the market popped. There was some headlines out that the Israelis were, firing into Gaza. I think they do that every day. I don't know why the market popped on that today, but the treasuries are the last bastion of safety, and every time somebody shoots a gun or a missile or whatever, they buy treasuries. I do think that kind of stuff is starting to abate a little bit. I don't think it's to the point where if we do rally automatically on some headline that you're supposed to hit a bid in treasuries yet. Maybe some point down the road we'll get that kind of a trade, but we're not there yet. Right now we're sitting up at the highs. I think we've been stuck between, oh Lord, it looks like the 10-year's been stuck between 7 and 9 since I want to say about 10 o'clock this morning. And the bonds, except for one little brief run up, we're stuck between 03 and 09, 149.03 and 149.09 since like 7:30 this morning too. Bonds did run up, made a higher high at 149.11. The 10-year did not make a higher high when the bonds did, and the ultras are really lagging behind. They're almost, a quarter of a point off their highs at this point. So we're seeing continued curve steepening. Tomorrow we get back into the swing of things with the 3-year auction. Typically the 3-year is going to go pretty well. The Fed in their POMOs are a net seller this week, so I think that takes away some of the underlying strength in the market. We're going to have to watch the other markets, the risk on, risk off trades, to see if this corrective move that started on Friday in the risk markets will continue into tomorrow morning. I think there's a lot of chit-chat on the wires about, Angela Merkel going to visit Greece for whatever reason. And, the Greek people are obviously upset with her for whatever reason. The welfare recipients in Greece, I hate to say that, but that's what they've become, these welfare entitlement mentality people, are upset because the landlord's cutting back on the welfare entitlements. Maybe a foreboding of what we have here down the road. We'll see that too at some point, I think. We put a small short on in the treasuries up here. Basically right here at 7.5 is my average. I got in a little bit early as usual. I'm always a little bit early, but that's why I tend to scale into these positions. I think there is a chance we could see a bit higher highs. Gary was in the chat room talking about the vertical selling bar where the market started to break down on Friday. And that's at 149.14 in the bonds and 133.12 half, rough 12 on the 10-year. So we could see a little bit more upside. I'm looking at the old lows in the 10-year at 10 half and 11 half as kind of being important too. Market does have a tendency to pop over those levels occasionally, but I've only put on a half of a position right now. I think if it does pop up a little bit tonight, I'll add a little bit more, maybe another quarter. I'm looking for a test back down towards the fib retracements of this rally that we've seen. My favorite target is 133 even plus. I'm working a MIT bid down there on a quarter of my position. I'll keep that intact. I moved my stop up a little bit. I had it at 12. I was playing those old lows, but when Gary talked about 12 half, or as being kind of 12 as being the top of that vertical distribution bar where the market broke down on the unemployment number on Friday, I moved my stop up a little bit. So I'm going to keep the stop up at 12 half right now, and I want to see how the market trades on some kind of a dip off of these levels. The pit close right on the highs. You know, there was no pit session, but they still used, I believe, the 2 o'clock close for the official settlement price. So we have a pretty, you know, bullish looking bar here, an inside bar obviously, but still, if we have an inside day trade, typically the objective of that inside day trade is to retest that day's highs, which is 09. Not a big deal. I think we could see that overnight, maybe even a higher high, maybe a 9 plus or a 10 trade. You know, if I see something like that, I'm looking for any kind of divergences, whether it's ultras not making a higher high or bonds not making a higher high, I'll add to my short position a little bit overnight. On the downside, let me throw off a couple of the fib retracements of the rally, basically. Looking at the fib retracement of the rally, right now I'm using the 09 high and the lows from Friday at 132.27 plus. Those fib retracements are down below us here. 133.04, 133 even plus is my favorite target. That's 618. 50% is 02, so somewhere in that even 04 area are the 3 fib retracements. It's not a lot because the rally hasn't been huge, but that's what I'm looking at, is the fib retracements of the bounce that we've seen today and last night to see how big of a dip we get here. I think it could just be part of a big corrective pattern where we did an A wave up today. We'll get a B wave down tonight into tomorrow, and then another C wave up into the 10-year maybe. That's kind of an iffy plan. I'm going to keep with the short positions because I do think there's a chance we could see one more lower low. We got into the 50% retracement level on the bonds. We didn't quite get there on the 10-year. I think we could see a little bit more downside. 132.25 was the 50% retracement on the 10-year. The next big cluster on the bonds down below us is 146.20 area. There's a big cluster of fib retracements down there. That's kind of what I'm looking at. That's the 618 retracement of the most recent rally. I kind of think markets are just in this big choppy range, and I'm going to lean on those 618 retracements quite a bit here. That's what stopped the rallies on the way up last week, and I think that's what will stop the break on the way down. So there's the game plan, guys. Kind of a worthless day. Only 160,000 10-years and 49,000 bonds. You know, it's hard to build a hugely bullish case, you know, beyond the price action based on how much volume we saw today. And again, it was a holiday, so I'm kind of tending to ignore what happened there and just focus on the price action right now. Stocks are bouncing a little bit into their close. We're not seeing much selling. I was hoping we could get some, you know, hourly sell signals up here. I'm getting some red candles, but the volume's so light, I'm not getting any associated volume upticks on the sell side here. Maybe I'll have to wait for tomorrow to see anything along those lines. So that's the game plan, guys. Have a great night, and I'll see you tomorrow morning. Hopefully it'll be a better day.